QuickBooks Pro Plus Desktop 2022 bank reconciliations from data that was entered from bank feeds for the first month number 1. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our bank feed practice file, going through the setup process with the view drop down, the open windows list on the left hand side, the company drop down home page in the middle, maximizing it to the gray area. Reports drop down. We're going to go to the company and financial, down to the balance sheet standard, customizing that report up top with a range change. This time only going up to September because that's going to be the point at which we do the bank reconciliation. So 01/01/21 to 09/30/21. And then I'm going to look at the fonts and numbers, changing the font size, bringing it up to 14. And we'll say okay, yes please, and okay. So we're going to be focusing in as of this date. Now note we entered 3 months of data, which is fairly common if, for example, you're entering data input from the bank feeds the first time you set the bank feeds up, or possibly it's towards the end of the year and you're putting like a whole year of bank feed information into the system for your year-end tax return and reporting needs or something like that. And then after that point in time, hopefully you can do it on a month-by-month basis and do it more on a regular basis. But in that instance, then, we might have the bank recs, so we're going to do multiple bank recs just to reconcile the data. Now, note that as you're doing the bank reconciliations, if you're building the bank reconciliations, as we'll assume here, directly from, or in other words, if you're building your information in your financial statements directly from the bank feeds, then the bank reconciliation will be quite easy because you won't have any outstanding checks and deposits, because outstanding checks and deposits are coming from a full service bookkeeping system in which we enter the data on our end and then the bank enters it on their end, and we reconcile the two and look for the differences in that case. So in other words, if I go to the home page over here, you'll recall when we started out our bank feed kind of analysis, we thought about a cash basis system, and not even a cash basis system, but one that's going to be even further on kind of like the easier side of things, that we're dependent on the bank, is going to be the one that's kind of the easiest system to use to just build our books from the information that is hitting the bank. And then if we had to move away from that, possibly we had cash register, a cash-based system, but we had a cash register and we're collecting sales at that point in time. And or if we have to bill the client, then we have an accrual component. Now, if we're actually entering the data on our end and recording the transactions, as would typically be the case in a full service bookkeeping system, whether a cash basis or not, and then using the bank feeds in order to check our work, then when we hit the bank with our deposits and our checks that are hitting the bank, it's always going to happen a little bit before the bank, because we knew when it happened when we wrote the check or when we entered the deposit. The bank didn't know when it's going to happen until it cleared the bank. So you can have this timing difference. That timing difference results in undeposited deposits or uncleared deposits and uncleared checks, which is what you're looking for with the bank reconciliation. If, as we're going to assume here, we constructed all of our books from the bank feeds, then we waited till everything cleared the bank and used that information to do the bank reconciliation, which will make the bank reconciliation easier, but still something you want to do. The bank reconciliation no longer being a double check between what we did and what the bank did, two separate sets of books that have been compiled separately that are now being checked on each other, but rather it's double checking that the data that we drew directly from the bank has been included properly, meaning we didn't skip any transactions and we didn't duplicate any transactions. So the first bank reconciliation will also have an added issue in that if you didn't enter the beginning balance is another kind of issue that might have to be put in place. So here's a mock bank statement, which we have this beginning balance we're going to have to possibly add here. That could be a problem. And then we've got the additions and the subtractions, which should basically mirror what we put in the system. In other words, if I go back into the balance sheet and I double click on the checking account, we're going to say here's the data, and notice they all got these little lightning bolts. That means that we got these information basically from the bank feeds. They haven't yet cleared yet, but they've got them from the bank feeds. And so this information should tie out exactly to the bank statement. Even the dates should tie out, which isn't the case if it was a full service system, because the dates would our books would be a little bit before the bank in most of those cases then. But in this case, they should tie out exactly because we got this information directly from the bank, which is the same place that created the bank statement. So let's go into a bank reconciliation. We'll go into the banking dropdown. We're going to go into Reconcile, and we're going to reconcile the checking account this time. We looked at a credit card in a prior presentation. And then we've got the statement date of 9/30. Now notice the beginning balance isn't there. We don't have that beginning balance. We could try to go in and basically add that into the register, but as we did with the credit card, it might not populate in that beginning balance because we didn't set it up at the beginning when we set up the account. That's okay, so we'll kind of do a workaround and see how we can basically do the workaround from that. So I'm going to now get the ending balance, which we're going to say is from a bank statement 20,554.80, 20,554.80. So this is going to be 20,554.80. And then we're not generally going to need any service charges or interest if we're taking our information from the bank feeds because that information has already gone through the bank feeds and will be already in our system. So, and oftentimes if we were not using bank feeds, we would have to add these items because they would be done by the bank. We would not have known about them. We would have to record them at the point in time we do the bank reconciliation. But if we have the bank feeds will tell us about them and they should have already been added. So we'll just go ahead and continue. And then here is going to be our information. Now notice that sometimes it'll actually check off the information that has already cleared because we basically got it from the bank feeds. But sometimes it doesn't, that you can't really depend on that. What you can do typically, notice we hit 3 months of data. I only want to see the information that's going to be for the first month that I'm going to reconcile first. I'm going to hide everything after that time frame, the date of our bank reconciliation 9/30/21, by hitting this item up top. And then this is all the stuff that happened during that time frame. And if we got this directly from the bank, I could generally hit mark all, and it should just mark them all, and we should be in balance. We're not quite in balance over here because we're out of balance by that beginning balance. But if you built your information from the bank feeds, that will typically be the case. And on the first bank rec, we got to deal with that beginning balance. After that, everything should be, good to go after that point. Now, if you did the full service, I'm going to unmark these. I'm going to close the caret on the left-hand side. If we looked at our bank statement, we've got the beginning balance, we've got the additions, we've got the subtractions, the ending balance, and then we have the detail typically down below. Now, if you have your deposits and things like that and your checks that were all like electronic transfers, all your deposits came in electronically from like platforms or something like that for like gig work, and your checks went out from electronic transfers, then you will often have the names, like a memo or something, as well as the date and the amount to tie this information out. So that's usually going to give you the most kind of information if you're using kind of electronic transfers. And so that should match up exactly basically to what we have on the bank statement if we built our bank statement from the bank feeds. Remember, of course, if you have your deposits that are in there from some other format, like they're coming through a credit card agency, or if they are cash deposits or checks that you're depositing, then it might be a little bit more complex because you might not have as much information with regard to the deposit type. And again, that's one of those areas where it's likely that you might have to move away from depending on the bank feeds in order to enter that information. You might have to enter that information on more of an accrual accounting type of system. But if you entered that information directly from the bank feeds, you waited till it cleared the bank, then the dates over here will represent when it cleared the bank and not the time that you entered it into your accounting system. The checks on this side, for example, if you had cash that you're paying out, or if you're paying out something with checks, then that's another instance where you might move away. If you're writing checks, you might move away from just a system where you're reliant on the bank feeds. You might want to write the checks, enter them into your system, because the point of writing a check would be you want to make sure that you saw that you wrote it and then see if it cleared the bank to see if it cleared, because there's going to be a timing difference. So that's usually, if you do a lot of check writing, an instance where you'd like to enter it into your system and check that it cleared the bank so you have that timing difference. But if you don't do that, then these dates over here are still going to be representing when they cleared the bank. They're not going to be representing when you wrote the check, which could be substantially earlier in time. So we're going to assume that all this information came directly from the bank feeds that we entered into the system. Therefore, our bank statement should basically mirror pretty much exactly what is in our system. And so when we checked everything off, we were only off by that $10,000. So we just need to add that. So I'm going to just check them all off again and say, okay, if I check all these off, I'm off by that $10,000, which is the beginning balance, which I'm going to assume is that beginning balance. I'll just put it into equity for our practice problem. I'm going to have to add it. So I could go into my register by going to the lists drop down, go into the chart of accounts, and I'm just going to go into the check register, and I'm going to close the caret on the left hand side. Now normally when you do these beginning balances, when you enter this data into the system, you would like to do it at the beginning of like your fiscal year. So if you're a calendar year company, you'd like to do it at January 1st. So you have a whole year's worth of information in one accounting system. And if you had a prior accounting system, then you would like to have that data, in the prior accounting system. But I'm going to put it here, as of the beginning of our current time frame. So I'm going to say as of 09, we're going to say 09, 01, 21, and no check number. I'm going to say that we had a deposit, which is our beginning balance. And I'm just going to put that into the equity accounts. So I'm not going to put it on the income statement. It's not going to be income. I'm just going to put it directly into the owner's equity on the other side. And I'm going to say this is the beginning balance for cash. And so then I'll have to enter that. So I entered it here instead of entering it, and it's going to say I'm hitting retained earnings with it. I'm going to say that's okay. I hit retained earnings with it. Okay. Opening the caret, what's that transaction going to do on the balance sheet? It's going to increase the checking account. So if I double click the checking account, it increases the checking account to show the beginning balances, which were not there on the bank feeds, because the bank feeds is only showing the activity, not the beginning balance from where we started before the activity started that we entered the data in from. And then if I close this back out, the other side is going into equity down here. It's not hitting the income statement, but it's in equity. So there it is in equity. And that's one way we can get that beginning balance on the book. So if I go back to reconciling on the left-hand side, we'll see this as a transaction, which is a little bit funny because it's not showing up here as the beginning balance, which it would if it was like a normal kind of thing going forward. But it'll work on the first bank reconciliation. If you can't get this beginning balance kind of to work out, you just check it off, because what we're basically doing is just checking off everything that's on our book, our bank statement, to the books. So the beginning balance, we could say, yeah, that checks off. It's not in the correct category here because it should be up in the beginning balance, but it is there, and we checked it off. And then we can check off all of these items. Normally you would go through them line by line and say, okay, there's the 3814, and then over here, here's the 3814. And then you go over here and say, okay, here's the 60, we'll make that yellow. Here's the 6003, and then here's the 6003, and check them off one by one. And then everything that's on the bank statement that is not on your books, typically you need to add to your books normally, because if it's on the bank statement, that means it's actually hit our bank somehow. And if it's either it's wrong, which in that case we got to talk to the bank, or we just didn't have the information, we got to record it. If it's on our books, normally, if it's on our books and not on the bank statement, then that's usually what we're looking for. Those are those outstanding checks and outstanding deposits. Normally, we would always have outstanding checks and outstanding deposits if we wrote checks and we were entering the information into our system before and not reliant on the bank. But if, as we're assuming here, we're dependent completely on the bank, we're waiting till everything clears the bank before we record it into our system. We're making our books at the point in time that stuff clears the banks, not the point in time that we actually did the transaction, which should be a little bit earlier in time. We're not going to have any timing differences. And that's why you could basically just mark everything off, and it should work out if you built your books that way, directly from the bank feeds. So oftentimes, however, this is a good time for you to kind of check off, like actually do some checking back and forth between the bank statement and your books, because you also can use this time to give yourself a little bit of a review of the transactions that are being made and make sure everything is lining up the way you think it should line up and whatnot. So then once this is done, this should be 0 at the end. If it's not 0, then you don't usually want to reconcile. It should be very easy to make it 0 because you're just ticking off everything that's on the bank statement on your books. And so it has to reconcile basically. And if it doesn't, you could figure out what the difference is and hopefully fix the difference. Because if it's not 0, then the quality of your bank reconciliation goes down a lot. Even if it's only off by like $1, that dollar that it's off by may not just be $1 transaction. It may be like 20 transactions that added up to it being off by $1. So if you're on exactly, the likelihood that 20 transactions that were wrong net each other out to being off by 0 is very low. The likelihood of 20 transactions netting out to be off by less than $5 or something is much higher, because now you have a range from 0 to 5, which is a lot more opportunity that you could be missing multiple transactions, both deposits and checks. So you would like to get that at 0. I'm going to reconcile it and check it out. So let's check it out, reconcile, and then check it out. Please wait. We got both. I'm going to display them. We'll display them here. Now notice also, if you want to look at a more detailed bank reconciliation that has outstanding items, if you have a full service system, we have courses on just bank reconciliation, so you can take a look at those. I'm going to make this a little bit larger. Font size, just like we have in other reports, up to 14. Now here, this is the summary reconciliation. And this one normally doesn't give you the information you need if there was outstanding items. But in this case, there are no outstanding items. In other words, we're just saying, hey, look, this is the beginning balance, which was 0 in this case. It's not really 0, it was 10,000, but we added the 10,000 over here. So normally it would just copy this. This one's wrong for us. But if I look at the 13, it's the 23,140.99. That includes the beginning balance, 13 plus the 10. That's why that first bank rec's going to be a little bit different. And then negative 2,586.19. There's that for the ending balance of the 20,554.80. There is that. So that basically just mirrors the amounts that have been cleared, which will line up exactly next time with the beginning balance rolling over and be correct. But that's not really the bank reconciliation. The bank reconciliation is usually us matching the cleared balance, which is on the bank statement, to what is on our books, which is usually different, but is not different this time because we've created our books directly from the bank statement. So we have no outstanding checks or deposits. So in other words, this is what's on the bank statement. And now, after having adjusted that beginning balance, if I open the caret up and go back to the balance sheet, that is also what is on the books at this point in time. So there is no reconciliation. It's the same number, which wouldn't be the case in a full service bookkeeping system, but would be the case if we created our books from the bank feeds themselves. So if I go back to the summary, now note if there were any outstanding items, then the outstanding items would just say like, here's 5 checks, that's the difference. That's not really what you want. You want the detail. So really you want the detailed report if it's going to be a relevant report, which is this reconciliation. I'm going to customize this. Fonts and numbers, let's increase the font size again to 14. Okay, yes, and okay. I'm going to close the caret. It gives you the same information up top, but then it gives you the details of the checks and the deposits, just like, and that just mirrors what would be on the bank statement. And then if there were any reconciling items down here, these are the new transactions. We don't really need that information after. If there were any reconciling items, they would actually lay out and tell us what those are, which is that's what we really want, right? If there are any outstanding checks and deposits, I don't want to just know that there's 5 outstanding checks. I want to know what those 5 outstanding checks are, what's the check number, what's the amount, so that we can double check and see if they have cleared the bank in the following periods. So this is the report if there was a reconciling item that you would need, But in the event that you're constructing your books directly from the bank feeds, there won't be any reconciling items. So you just want to do the process of reconciling, and then note on the bank reconciliation that you don't have any reconciling items because you built your books from the bank feeds, and therefore the information, the information, you're just checking to see that you didn't enter anything twice, and you're just checking that you didn't miss anything that you would be entering by doing the reconciliation. So it's still important, but it doesn't give you as much of an internal control as if you were doing the full service bookkeeping, entering the books separately from the bank and then tying the two together. So it's still important though. So that's going to be that. Now next time we'll do the second month just to take a look at it, which will be a lot easier because that means the beginning balance here will roll over and be correct, and you won't have to deal with that beginning balance issue, and all you have to do is usually just go in there and just check everything off, and it should reconcile, and just do that to double check that you have entered everything and you haven't double entered anything.